Welcome back to the Real Estate Debate with Mr. Credit on AM 760 KFMB.
All right. Welcome back. Thank you for hanging out with us on your Sunday afternoon. Mr. Credit here. You're listening to the Real Estate Debate. Sean Cahan is judging today with Cornerstone Mortgage Group. Sean, how many points did I get in the last segment? Just curious.
9.
How do the scores look so far? We're halfway through the debate.
Well, you're in first place.
Awesome. 9. Cool.
No, I'm just joking. So we actually have a tie. Nate Robinson came up in that second round. So we have a tie between Scott and Nate with 8 points apiece.
Okay.
Melissa, you have 6, and Brian, you got 5.
Okay. So we have Nate Robinson with 8 points, Scott Ryan with 8 points, Brian Daly with 5 points, Melissa Zavala with 6 points.
Correct. Yep, that's
okay.
it.
Great stuff. We're heading into agree or disagree.
Time now for agree or disagree.
Can't we just settle this over a pint?
Agree
Yes! Yes!
Or disagree.
To call you stupid would be an insult to stupid people!
Let's get it on!
All right, Scott Ryan, we're going with you. Today's agree or disagree statement is, quote, and this was inspired by a story in UT San Diego where they're talking about rising rents. Quote, rising rent is not enough to keep the real estate market going up. We need to see real progress in the local economy to sustain current prices. Agree or disagree?
I'm going to have to disagree. I think that the economy is very good right now. It's very healthy. You drive around your neighborhood, look at the number of people spending money on their homes. It amazes me what people are going through right now and fixing up their homes, landscape, that sort of thing. I think that this market right now is actually being propped up, based on the affordability with rates. Rates are the key indicator right now that are causing people to buy. It's not because rents are going up. So I think that as long as rates stay low, people are buying for the long term. They want to move up to a better property, or maybe they want to downsize. I can't count the number of times that I've listed a single-story home. I've met buyers that are they have the big house, they want to sell, they want to downsize, they want to stay the long term and take advantage of low rates.
Okay, so low rates is it. It has nothing to do with rents. You say don't worry about it.
Correct.
Okay, as long as rents stay low, we'll be good, according to Scott Ryan. This is Zavala.
I agree with Scott. It does. Interest rates do have they're a big factor. I think that as long as they're low, the affordability is a lot better. But I think there's another factor that's playing into this, and it's the fact that the Great Recession really started in 2007 and then 2008, and we fell deeper and deeper in until about 2011. But now the waiting periods for significant adverse credit events or derogatory credit events, a lot of people are through that and can buy again. So I think that that's also pumping up the market. So we've got low interest rates, and then we've got like conventional home buyers that maybe had a foreclosure or, a short sale particularly, or a deed in lieu of foreclosure. Their waiting period was 4 years or 2 years with extenuating circumstances. If they did it in 2008, 2009, 2010, even 2011, they can now buy again. So we've got this whole other group of people, hundreds of thousands of people that did short sales or were foreclosed upon that are now in the buying pool again.
Okay, so you think that those people coming back into the marketplace is what's really keeping things going?
I wouldn't say that's one factor. I think interest rates is another. And of course, as far as the article went, it was interesting that Marcus and Millikamp reported that the average rent increase in San Diego County was up 5.3% over last year. But it's really sad because the Bureau of Labor Statistics said that the wages have increased less than 1%. So we've really got this huge disparity. So that was really jarring. So I think the fact that the interest rates are still low, combined with the fact that these people can re-enter now from their derogatory credit events, that makes like a really good cauldron of, or the stars are aligned, let me just say.
It's a good mix.
Yes.
Okay, very good stuff from Melissa Zavala. Nate Robinson.
Yes, I'm going to have to tap onto what Melissa said because I agree that, it's not just the rents that's actually sustaining this market. It's a lot of other factors. Interest rates are really important. The boomerang buyer is extremely important because that's exactly who we have coming back to the market.
Really?
And yes, so we had enough time for them to actually go through the things that they need to, get through the derogatory credit, get through the foreclosures. Foreclosures are totally down as far as I can see, and Inman News is actually supporting that as well as some of the other resources that we're using personally to actually track market. And, we do like to help a lot of distressed homeowners. But that has gone way down. So we do have a lot of boomerang buyers that are back to the market, and that's helping out. Interest rates remaining low is the most important factor. Never has money been so cheap, and right now it's being sustained. We're under 4%.
Yeah.
It's just...
A lot of people don't even realize it.
That's. I mean,
Rates
remember
are just insane.
years ago, you used 8% was like great. It's like I got an 8% loan. No, it's under 4%. So that's what's really sustaining this market at this point in time.
Okay. All right. Makes sense. Brian Daly.
So I'm gonna agree as well. I'm gonna piggyback off what everyone else said. The rates are the biggest thing of what's sustaining the market right now. But I do think that's temporary, and we all know it's coming. Eventually, the rates are going to go up again. And the biggest thing for us here locally is it was touched on, but I don't think it was given enough clout. It's the wage growth. We've seen more jobs over the last 6 months, but a lot of those have been lower income jobs. A lot of retail, a lot of restaurant jobs. We need to see a more consistent growth in higher paying jobs. We started seeing that a couple months ago when the actual numbers of construction labor picked up, and those are higher paying jobs. So we started to see a little bit of wage growth last month from the numbers, the employment numbers from San Diego locally. We need that to continue for a long period of time to help us get through what right now is holding us up is those interest rates, but that is only temporary. And when those rates go up, the market will feel that effect. So
Okay. All right. So I'm going to go off the script for a second here and throw kind of another follow-up topic into the pool here. So everyone seems to think that interest rates are very important to sustaining demand and prices. But if we go back and we look historically, every time interest rates have gone up, we actually haven't seen prices go down. We've seen prices actually continue to go up because rising interest rates also is a result of good things happening in the economy. So interest rates don't just go up because it's time for interest rates to go up, right? Interest rates go up because people decide it's time to raise interest rates. It's safe to raise interest rates because things are so good. So if we see interest rates go higher, it should signal there's really good things happening in the economy. We haven't seen that yet. We talked about it, but they haven't actually done it, right? So the point of what the statement I was trying to make here is that rising rents was kind of the last straw that you were looking at when you look at the reasons why the market's been so strong. You keep trying to look for these reasons, like where are all these buyers coming from? Where's all this cash coming from? How are people still paying over list price and stuff like that? Like even in the $1.1 million market you mentioned earlier in Carlsbad,
Right.
They're getting 101% on list price right now. And so you look at stuff like that, and high rents has definitely got to be a part of it. But so the local economy, Melissa, as you mentioned, we have seen a serious divergence in home prices and average household income. At some point, that's got to be the real issue. Maybe it's not yet, but if you look at other markets that have seen this type of growth and sustained it over long periods of time, San Francisco, New York, et cetera, you've seen that their economies, the average salaries in those areas have gone up to be able to support it. Does anyone have anything to say to that?
I agree on the wage part. Going to the historical stuff, and you might actually be able to answer this question, but when is the last time that rates have been this low for this long? Like, do we have any historical data to go off of that we can say, hey, this is like this last time when rates started going up, it didn't affect values?
Not really, but we have instances in which rates have gone up and down. Rates have gone up and down forever. And if you just look at the times in which they've gone up, it hasn't really caused prices to go down, home prices to go down.
Last summer, it did. When we had that 1% price increase in
that was in like a week.
But it affected us for I think 4 months. I think we saw the effect of that from July, August, September, and November. We saw. I saw it across the board where the activity fell off.
I'll share just some of my personal experiences recently with buyers because I'm working with a couple buyers right now that are renting, and they're looking at I can continue to rent, but there's no investment. I have no tax write-off. My income is going up, so. In some ways, they're feeling almost forced to buy. Now, is the timing right? It could not. No one has a crystal ball. But they know that if they don't buy, they're going to continue to pay more and more in taxes and not have those write-offs. So there's other reasons, other than just rates or, the reasons you gave for rents going up. Because these renters, their mortgage is going to be far higher than their current rent. So in my opinion, I think a tax write-off is another reason why buyers could be getting into the market now.
Agreed.
So to your point, I think that wages are important, but your example was like San Francisco or Silicon Valley, and I think we really need to look at the average wages in San Diego County, and also historically, what was the disparity between the wage and the rent increase? We have a pretty significant disparity right now. I don't know in those previous periods that you cited what the wages look like. Our jobless rate right now nationally is like 5.9%, but that's because so many people are out of the market because of what's happened, and then they aged out, and now they're on Social Security, that I think there's a lot of I'm not sure I totally agree with you.
I can tell you specifically, in 2013 we had about a 10% increase in real estate values, and we had about a 10% decrease in the household income. So it went from about 55,000 to 50,000 as the average household income. So that was what I was referring to, the divergence of what's happening with regard to that.
So there's just so many factors to analyze in order to, but it's really an interesting conversation.
It is. Sean, did you have something you want to say? You want to jump in here?
Yeah, so kind of going back to the 2013 when the actual interest rates went up 1%. It was more like a 7/8 increase in between July and the beginning of August. But if you'll actually take a look, did it actually go down in value, the prices? Not typically. What was happening was it stopped all of the 17, 25, 40 offers on a home going $20,000, $40,000, $50,000 over list price. It actually just came to a halt of, hey, this is actually going crazy right now, and they're actually increasing too much. I heard in some points it was like a 24% increase in some areas within, March to July.
Correct.
Okay, so it was not so much of a decrease. So is the increase in interest rates really going to decrease the values? Not really sure.
That's the thing that is kind of there. We'll certainly debate that more than once on this program. That is the $1 million question here in San Diego real estate. All right, coming up, it's time for listing of the week. Stick around so you can find out the hottest properties for sale here in San Diego. We'll continue to make you smarter than everyone else right here on the Real Estate Debate, AM 760 KFMO.